Many people believe the myth that they have to have perfect credit and a 20% down payment to secure a mortgage home loan today. Perfect credit and 20% down payment is a widely held but false belief. Another misconception is that private mortgage insurance is a bad thing. This too is a misconception. Private mortgage insurance is a good thing, and access to private mortgage insurance is not reserved for first-time home buyers only. It is time to rethink private mortgage insurance because it is a tool to help more people become homeowners. Welcome to episode 137 of the Martini Mortgage Podcast. My name is Kevin Martini, and I am a certified mortgage advisor with the Martini Mortgage Group, which is located in Raleigh, North Carolina. However, I help families in all 100 counties in North Carolina and pretty much in every state in the U.S. too. I'm calling this special episode 5 Benefits of Private Mortgage Insurance. Before I start to dig into the 5 benefits of private mortgage insurance, know that private mortgage insurance is also known as PMI, mortgage insurance, MI, or private MI. Whatever one calls it, PMI is a guarantee that reduces the loss to a lender in the event a borrower doesn't repay their mortgage. Let me share an audio 30,000 feet example for illustration on how PMI works. Let us assume a borrower is buying a $200,000 home with a fixed rate mortgage and they are putting 10% down. Hence a $180,000 mortgage. With a 90% loan to value on a fixed rate mortgage, 25% coverage is required for most conventional home loans. In other words, the mortgage insurer is covering 25% of the loan amount or responsible for paying 25% of the outstanding loan balance in the event of default, which leaves the lender's risk at 67.5%. If there was no PMI, the lender would have all the risk. Because of the coverage protection PMI offers lenders, PMI creates an opportunity for buyers to buy with less than 20%. Now to the 5 Kevin Martini benefits of private mortgage insurance. Number 1 is private mortgage insurance allows one to buy a home sooner and earn more equity with a lower down payment. Let me explain the story. Walter is renting in Raleigh, and he has a good job with a little money saved up. However, Walter does not know if he should keep renting or if he should buy a home. Let's assume that Walter has $10,000 saved up. However, his folks think he should hold off on buying until he can save more money for a 20% down payment. Should Walter explore his home ownership options now, or should he keep renting until he has the 20% saved up? Before I move on, as a certified mortgage advisor, I provide a human touch to the families I serve. I assess the full financial picture, understand future goals, and design a mortgage product that meets the needs if homeownership is the right strategy. I share this because homeownership is not right for everyone, and that is okay. If it is right for you and your family, taking action sooner than later is smart. Let us assume that I have assessed the homeownership is right for Walter. Here are some factual nuggets I would share with him. I would share that home prices and mortgage rates could rise, and this increase would make his eventual purchase more expensive. I would share that the rent he pays will not build him any equity, and I would highlight rents are rising every year. I would share that there are home loan products offered by the Martini Mortgage Group that require 3% down payment, and there are also programs that might not even require a down payment. I would also highlight the cost of waiting. In other words, It would likely take 5 to 7 years for Walter to come up with a 20% down payment based on his current savings. According to the April 2022 Raleigh Real Estate Report, the median home price is $395,763. And the appreciation forecast for the next 12 months is 6.94%. And for the next 60 months, homes in Raleigh area are expected to have a cumulative appreciation of 24.15%. This means waiting for 5 years to save for that 20% down payment would cost $95,571. Oh, by the way, who knows where mortgage rates will be in 5 years from now? We know that today, home loan rates are not as low as they have been. However, they are still at historic levels. Private mortgage insurance would allow Walter to buy a home sooner and earn more equity with his under 20% down payment he has today. Number 2 of 5, Kevin Martini benefits of private mortgage insurance is expanded cash flow. Remember that PMI is not an exclusive benefit for first-time homebuyers. Repeat home buyers have access to private mortgage insurance too. There is nowhere that it says you have to go from a small home to medium house before you can afford your dream home. Putting less down can be more. Let me share a real-world family that I've helped. This family has 2 young kids plus 1 on the way. They simply outgrew their current house and they needed a bigger home to accommodate their growing family. They had enough for a 20% down payment, but with their daycare expenses were getting ready to explode, plus having knowledge of their future plans they had, which I learned during our mortgage strategy session, I developed a lower down payment financing solution. The election to go with a 5% down option and save $63,750 of cash. Yes, their payment went up, but it would have taken them 12 years to resave $67,750. Plus, since they were already in their home for over 2 years, that $63,750 was tax-free, and this mortgage strategy expanded their cash flow. Oh, by the way, private mortgage insurance is not required to be on the loan forever. There is a point that PMI can fall off the loan, and that will be an opportunity for a lower payment without refinancing. Number 3 of 5, Kevin Martini benefits of private mortgage insurance is it provides the ability to buying first and then sell. Sometimes one needs to buy first and then sell. They qualify from a debt to income perspective, but they do not have a large down payment. Take a look at the family I just talked about. They both work and they have 2 kids and 1 on the way. They didn't have time to properly stage their house for sale, nor did they have the ability to keep the house in model home condition. But they did have some liquid cash plus some money in their 401k, plus they qualified for 2 mortgage. Here is what I did. They put 5% down. Some came from cash on hand, and they took a loan from their 401k. They purchased a home using PMI, and once they sold their home, they paid back their 401k loan and had some extra cash they needed too. The other benefit with this strategy is they knew they would never be homeless, and they had time to find their dream home because they already had a roof over their head and no pressure to find a home by a specific date. Number 4 of 5, Kevin Martini benefits of private mortgage insurance is it helps overcome appraisal issues. As you know, at the time of this recording, we are in a very hot real estate market. I had a client that finally had her bid accepted on the perfect place for her to call home. The listing price was $380,000, but she offered $400,000 to be competitive. She had a plan to put 20% down, but sadly, there was an appraisal gap. The home appraised at $380,000. Now, she did not have the ability to put 20% down and cover the appraisal gap. I developed a strategy using private mortgage insurance where her payment actually became exactly the same with 15% down as compared to what she originally expected, thanks to the help of PMI. Yes, this was an advanced strategy used as a certified mortgage advisor, and she was able to reap the rewards of my extensive training and ongoing continuing education to provide cutting-edge home loan solutions and get her into her dream home. Finally, number 5 of 5, Kevin Martini benefits of private mortgage insurance is PMI provides the ability to afford homes in higher price points. Simply put, PMI helps you expand your house hunting options. PMI will help you break into new neighborhoods and new price points. Let me get real. It takes time and hard work to save money. Let us assume that you saved $15,000. For simple illustration, you would have 3 options. Option 1 would to be buy a home for $75,000 and put 20% down, or explore the other 2 options that include the use of private mortgage insurance to amplify your buying power. With that said, let me share option 2. You double your purchase price to $150,000 and put 10% down. Or you 4x your purchase price to $300,000 and put 5% down. I am not a real estate agent. However, I know there is a material difference between a $75,000 home to a $150,000 home, and there is a quantum leap from a $75,000 home to a $300,000 home. Assuming, of course, that they can afford the higher monthly payment that accompanies the larger home price, then when using PMI, you are offered increased buying power and expanding your home search, allowing yourself and your family to consider a wider range of home prices and available homes for sale. Wow, that was a lot, wasn't it? In closing, let me share this with you. Private mortgage insurance is there for you when you want it or need it, and it's not there when you don't need it. PMI can usually be canceled when the loan either reaches the cancellation point due to amortization of the original loan amount, or the borrower requests cancellation based on increase in their home values due to appreciation or home improvements. If you have questions about private mortgage insurance or about how PMI can help you and your family, I am here. If you want trusted advice with a digital mortgage process that offers a great rate with certainty, check out my website by going to www.martinimortgagegroup.com. You can find some real-world information there, and you can also secure apply online or book an appointment with me. Be sure to check out the April 2022 Raleigh Real Estate Report Card, which can be found in the Learning Center at www.martinimortgagegroup.com. Thank you for tuning in, and thank you in advance for sharing this episode with someone you care about that could benefit. My name is Kevin Martini, and this was episode 137, which has been called 5 Benefits of Private Mortgage Insurance. Now it's time for the disclaimer. This material has been prepared for marketing purposes only. This is not a loan commitment or guarantee of any kind. Loan approval and rates are dependent upon the borrower's credit, collateral, financial history, and program availability at time of origination. Rates and terms are subject to change without notice. The Martini Mortgage Group at PCL Financial is a division of Celebrity Home Loans and MLS number 227765 with a branch address of 507 North Blunt Street, Raleigh, North Carolina 27604. You can contact Certified Mortgage Advisor and Producing Branch Manager Kevin Martini, NMLS 143962, by calling the branch, and that number is 919-238-4934. For a full list of more licensing information, please visit www.mlsconsumeraccess.org or by visiting www.martinimortgagegroup.com. Equal Housing Lender.